Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Welcome back to the show, Bob.
Yeah, hi, Jim. Here we are on Friday, and it's a dull gray Friday in Vancouver with a bit of drizzle. And it's getting rather ugly black out there in the financial markets.
Yeah, but at least for Vancouver, the forecast for the next week is back to sunshine. And the lower mainland of Vancouver is actually in a Category 4 drought. We've had very little rain over the summer.
Oh, yeah. Well, yeah, it's been amazing. And yet we're getting a lot of rain in the markets these days. So what can you say?
Yeah, is it going to be a hurricane, perhaps one of the stormiest hurricanes ever? Anyway, we love listener questions, so let's just get right into it. Our first one comes from John in Boston. Hi, Bob. I believe I have heard you say the Fed is a follower of interest rates more than a setter, and that the bond market is in charge. But I have also heard you excoriate the Fed for the long-term depreciation of the dollar. I was wondering if you could clarify this. Thanks and love your research. John in Boston, who will call from now on Boston John.
Oh, definitely Boston John. We're all with you. Yeah, it's not just the Fed, because I did the research on the senior central bank, which prior to the Fed was the Bank of England, and where the data was available, you would see the bank changed its administered rate. Now, decades ago, that was the discount rate. And then more recently, they go on about Fed funds rate. But anyways, it's the administered rate. And at conclusions of big booms and stuff like that, the evidence over, maybe 150 years, is that the senior central bank follows the moves in short-term interest rates as determined by market forces, like Treasury bills or the equivalent. And it's just there in the record. So, like, for example, in 1929, the T-bill rate went up until June, and then it turned down. And that was then an indicator that the boom was coming to an end. So then, and I read up about this a while ago, so you go back to January 1929, and there were members in the interest rate committee who were concerned about the amount of speculation in the financial markets and wanted to tighten up against that and raise rates, but they couldn't get the majority vote on that. However, maybe in August, the guys were away on holidays, and they managed to finally get through the interest rate increase. So in the middle of August 1929, the Fed raised the rate from 5% to 6%. And also at that time, I ran into an article on it in the New York Times, and the article argued that the Fed was tightening to Wall Street, but would be easing to Main Street. So anyways, here you had T-bill rate reached its high in June and headed down. The Fed administered rates set its high and raised it up to 6% in October, and then they didn't lower it until the end. Raised in August, and they didn't lower until October, and then eventually down to virtually zero. So now that looks after the history of the senior central bank following natural changes in short-term interest rates. Then the next part of the question was dealing with the depreciation that Fed activities forces upon the U.S. dollar. Of course, there's no time when the Fed isn't interested in getting credit out the window. They have a morbid fear of deflation, but don't know when it's going to happen. So the issue is the Fed tends to be easy all of the time, and that eventually is injecting more and more money into the system. So you get currency depreciation, and the purchasing power of the dollar now is about 3% of what it was in 1914 when the Fed just opened its doors for business. It's been a long-running evil by stupid people. So, anyways, I can continue to condemn central banking.
Our second question comes from Bert Winkenbach. Bert says, is it possible I would like to ask Bob a question? Well, it certainly is, Bert.
Yeah.
His question, a couple of weeks ago, Bob reviewed that the duration and amplitude of the possible full extension of the bear market in U.S. shares could last 3 to 5 years. Does that ultimate low in the U.S. share market correlate with a top in the gold price?
Okay, not necessarily. And it's best not to consider the gold in U.S. dollar terms. With my analysis, it's best to take the deflated price of gold in senior currency terms, and it tells a story. And so it reaches, the real price declines on the boom that we call a bubble, and then that then guarantees that the gold stocks will underperform, say, the S&P. And then you run into the problem where when the big speculation in New York finally collapses, it takes everything down with it, including gold stocks, which is there today. So, no, it's... and then if you try and figure out what the price of gold is going to do in dollars, what happens if the U.S. goes to a gold standard? Then there's no price change, but it always changes in real prices. So gold in the real price has been doing the right thing, and it's in the process of bottoming, and with the contraction, the real price will go up, and that will then put earnings back into profitability back into gold mining business, and then you get the big bull market for gold. Now, Bert had some other things.
Yes, the second part of his question, does that ultimate low in the U.S. share market correlate with maybe a top in the U.S. dollar as well? I know the latter is difficult to digest for a lot of people because the usual thinking is gold up means dollar down. Yeah,
well, the dollar, as long as the contraction is on, the dollar is going to keep going up. Here's another rule from financial history, is that the senior currency in the contraction goes up relative to other currencies and relative to commodities. It's just the way it works. So you'll notice that when you get these heavy hits, the U.S. dollar goes up. It's just the way it works. Now, there is some mechanism under that we can offer by way of explanation, and that is that during the debt part of the bubble, and all you need is to have most of the global debt written and on the expansion due and payable in U.S. dollars into New York, and all of that debt then becomes mysteriously a huge short position of dollars. So that's the best explanation I know of it. So the trend for the dollar will be up, and up sharply when the markets are suffering heavy liquidation. And as the other thing you also, Bert, puts in is the usual thinking about gold up means dollar down. Now, it was only a few months ago, and thinking about it, I thought, oh yeah, guys who buy gold stocks in the States based upon the U.S. dollar going down, putting the price in U.S. dollars up, really are speculating in foreign exchange markets. And then the other side, if you have a working model that points out that earnings for the sector are going to be going up, and then you buy the sector, you're investing in a stream of earnings ahead of you. So it's a huge difference. Really, the standard, the orthodox ploy in the precious metals sector virtually 99% of them are hypothecated upon dollar down, gold up, and that is just foreign exchange speculation. So what we have here now is that the dollar can continue to go up relative to other currencies, and the dollar can continue to go up relative to commodities. But the main thing is that if commodities are weak relative to gold, then the profitability... Oh, just take a look at crude oil, for God's sakes. You've got about 60% of mining costs are rest upon energy. You've got energy to run the machinery, and you got energy you need to blast the hell out of the rocks. So and lately, just the last few weeks, gold is outperforming crude oil very nicely. It's in the uptrend, and what we're waiting for is the gold divided by the CRB to turn up, and then that would be a very positive indicator. But Bert, thanks for your question.
And we have a multi-pronged question as well from longtime listener Michael. Hi, Jim and Bob. Bob, is the 10-year U.S. Treasury rate heading to 4%? The TLT, the 20-year plus U.S. bond ETF, is at lows not seen since the fourth quarter of 2013. Is this the time to buy? And if so, what duration bond?
Well, yeah, probably out of this hit this week to the financial markets, people are going to realize commodities are getting trashed, inflation is no longer the story, so longer bond maturities, treasuries will likely rally. So we're working on a trader's buy here on the TLT, on the bond future, whichever you want to play in. And of course, in looking for a rally, the longer the term you are, the bigger the bang you get for your dollar. So, yeah, we're as I say, we're pending on a trader's buy in the bonds. Maybe you can get a 10-point rally out of the long bond, and but it was also maybe turned into one of these crazy flight to qualities where it could get more than 10 points out of it. But yeah, there's a possible opportunity in long treasuries as the all lower grade bonds, junk, high yield, all that sort of stuff gets trashed, because ultimately it's all going to be garbage. So, good question. Thanks a lot.
Michael's second question: will defense stocks be a good defensive position in the next equity market downturn, given the fact that the U.S. munitions arsenal has been seriously depleted? Or would it be better to invest in alcohol and casino stocks, assuming a depressionary mood envelops investors after a 1929-style market crash? I'll drink to that.
That's a good one. Yeah, you've got the double meaning there on defense stocks. Usually it means to get into defensive type stocks like utilities and stuff like that. And then, of course, there's specifically here, Michael's meaning the stocks involved in defense. But our view is that the standard equity portfolio management to go to defensive stocks, like maybe utilities, is the only way you can keep the money in the account, in an equity account. So, but you laugh at it afterwards, because all that happens with the defensive stocks is they go down slower than other stocks. So I don't subscribe to defensive stocks in the sense that they're like utilities. And to play the defense stocks, Raytheon and things like that, you want to sit there with the charts and take a look and see how they trade. But and as to booze, oh yeah, it's definitely going to be a salvation. Wine, cognac, brandy, single malt whiskeys, there's going to be a great need for those.
It reminds me so much of I guess it's a bad joke about the lottery winner who won $10 million a year later. It was all gone. He was asked what he spent his money on. He said, booze, drugs, and women. The rest I wasted.
Yes. Mm-hmm.
We'll have more with Bob Hoye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Some headlines that caught Bob's eye today. The first one, tycoon running a quarter of China's copper trade is on the ropes.
Oh, yeah. This goes back to March when you had the huge the biggest short squeeze was in nickel. But obviously maybe the other metal traders got offside on the action as well. But I know, for example, in the 1873 bubble, the copper base metal mining stocks were hot, and there was forming cartels in the U.S. on producers and stuff like that. So base metal mining and smelting stocks soared to the moon, kind of thing, and then it was all over and it crashed. Then it took. Now there was problems with wrong side of the copper trade, and Barings, the big bank in London, somehow was accommodating things, and then by 1890, and they were also long too many Argentinian bonds, but it almost wiped the company out. So, and that was due to the long fallout from unique speculation in base metals that can happen. So that didn't know about this China copper trader, because the word early in the year was that the big deal was nickel. So, but it's yet another example of a crazy market for base metals being followed by many years of unwinding the problems.
Second headline, dollar's rise spells trouble for global economics.
Oh, doesn't it? Yeah, we're seeing that this week. U.S. dollar index up, and financial markets under a lot of pressure. So, yeah, that was. I think you're going to see that headline many times.
Well, now we have the Canadian dollar in the 73-cent range. It was 78 not long ago.
Yeah, and it's heading for 68. If there's no change in government, maybe even lower, because this federal government is so inept and so misdirected, misguided, and everything else. They're raising taxes on food, they're raising taxes on energy, they've got carbon taxes, and they're even trying to discourage farmers from using nitrogen to replenish the nitrogen that's taken out of the soil on every crop year. So, Ottawa is totally, utterly insane and will do a lot of damage before they're forced out of office. And that'll show up, unfortunately, in the Canadian dollar. So even that then is screwing you, because any imports from the States are going to cost more. So, Ottawa is terrible.
Headline, California sees warning sign from weak tax revenue collections.
Yep. Tax revenues to state, provincial, or city, municipal, will be slowing. And even in California, a headline like that, it's important. That's a banner headline on the problem of how a contraction then hits various levels of government. Tax revenues slow down.
I know a lot of people say tax the hell out of the rich, but one problem with that philosophy is, unlike the poor, the rich can leave a country into a better tax environment. Poor folks in the middle class are stuck there.
Yeah, yeah, that's a tragedy, that one.
Headline, Frugal is the new cool for young Chinese as economy falters.
Yeah, that was another good one, Jim. Younger people have suddenly said, uh-oh, and are, tightening their belts. So, yeah, it is an important headline.
Well, in Vancouver, especially, and maybe other big cities, millennials and Generation Zers or Zers, depending on which side of the border you're on, they don't feel the need to have a car. It's not even part of their dream. They're just happy to make rent, and they've pretty well kissed the possibility of owning a house goodbye.
Yeah, Well, that's all part of the World Economic Forum, WEF. You will own nothing and you will be happy.
A headline, why the World Economic Forum's plutocracy should be dissolved. Why should it be dissolved, Bob?
Well, throughout history, you've had various organizations get together, like going way back. It was the Masons, and they wanted to impose their authority. And then you had trilateral commissions, you had the Bilderberg Group, and then more lately, you have the World Economic Forum, which just maybe 25 years ago was a very attractive and interesting forum. I know I tried to get myself into it years ago because socially I've met a guy then who was a director of the WEF, and I just thought it would be fun to attend, but it was not threatening then. It's only in the last few years that it has coalesced into a compulsive, authoritarian-driven agency. And like all these previous ones, the Club of Rome was another one that came to mind. All of these seem to coalesce together at various times and have authoritarian ambition and threaten, and then things change and they just kind of fall by the wayside. And this is what I think will happen to the WEF with this financial collapse this week. This says that the economy's over, everything's over, and we are in the serious phase of a post-bubble contraction. And people are going to be unemployed at a rate you won't believe, and then they will not go for any of the global warming, climate change, and anything like the Great Reset that the WEF is pitching. No, this is all going to get rejected through practical reasons, and not that I'm looking forward to a very severe post-bubble contraction and the hardship that goes with it. At least one thing, there'll be some political offset to the mania of control freaks that's been going on lately. But I don't know, Jim, we want to do all of those headlines.
But they're so good, Bob. Your headlines, you do the research. Let's chat about them.
Chat about them, yeah.
Headline, checkbook journalism bought and paid for by climate, quote, news, unquote.
Yeah, that was the one where, they're raising money. Oh, PBS, Public Broadcasting System in the States, where money's going in to fund their climate comments. So it's bought and paid for news and research, yeah.
Headline, Turkey's Erdogan, Putin willing to end war.
Yeah, I think Erdogan is at the moment in a key place, and the tide is turning against Putin. We should go back to February when that invasion, they fully expected within a couple of weeks to have control of the capital of Ukraine, Kiev. But as we've seen, the Russian military has been incompetent. Generalship, supplies, all that sort of stuff. And then once the West got onto it, got in some very, very good ordnance. So the tide is turning against Putin, and he's talking about throwing some atomic bombs around, nuclear bombs around, and that ain't going to happen. The generals, the top generals in Moscow are just not going to allow that. They'll push Putin out one way or another. So it's brutal politics that he's been conducting. He's been failing, and then he's announced conscription, where he's forcing young men to join, and people are leaving, protesting, and so no, it's a terrible mess. And I think Putin will fail and be seen to fail within the next few months.
And our final headline, the ragtag army that won the Battle of Kiev and saved Ukraine.
That's more of the story, yeah. Yeah, it was. That was when Kiev was more directly threatened early in the conflict. And they had guys that with clubs, with drones, all of a sudden they realized they had GPS and positioning and all this sort of stuff, so they were helping out the military with whatever artillery they had, and it's been helping out a whole lot. So altogether, the resistance out of Ukraine has been a miracle. Yeah, let's call it a miracle. And the closing of the miracle would be when Putin departs, either office or otherwise.
Bob, thank you so much for chatting with us.
Jim, it's been an interesting conversation we've had back and forth. The questions have been good, and it's in a terrible storm in the financial markets, and the storm will continue. Oftentimes, October can be the month that clears a serious liquidity problem, so we'll be watching for that and come out with the research, hopefully at the right time.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on BitChute at Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you so much for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.